Today's guest is a recent college graduate turned crypto trading millionaire, now a managing partner at Zorax Capital. Zoran discovered his knack for trading cryptocurrencies during boring college classes. I think we've all been there. His pursuit turned incredibly profitable, resulting in a quickly amassed Twitter and Telegram following. Now his goal is to teach any retail trader how they can make money. So Zoran, Kole, man, welcome to the show. Thanks for taking the time.
Thanks, God. Appreciate you inviting me here.
So when did you get into crypto? Because you have you're one of those people we're all jealous of who's young and got into it at the right time. Not in your 40s like me.
No. So I found crypto early on. I got in actually at the top of the previous cycle. So the Mt. Gox top, 2013, beginning of 2014. I found out about the Silk Road for more nefarious purposes, obviously, and from there kind of saw the volatility in Bitcoin. And it was interesting seeing something go from $100 to $200 and then up to 800 to 1,000. So it was around $800 where I said, okay, let's go all in. It's going up to the moon. You know what it is. And it wasn't shortly after I saw it crash all down on me, down to like 200 something a coin. So I got in late 2013, early 2014, and became a bag holder of Bitcoin.
There's worse things to be, though, in retrospect. But had you traded anything else, or was it sort of like this was the first investment you saw and you saw the potential and you were like, people are making, the meme, like everyone's getting hilariously rich and you're not, and you just decided to like go for it?
Absolutely. So yeah, I had never thought about trading at all. So I first became a Bitcoin investor by default, right? I wasn't really poised to do that, but then holding through it, I got mad at the market, dude. I was upset that I had literally lost my life savings at the time, like 20, 30,000 at the time. And then to kind of get back at the market, I said, well, what can I do? I can sit on my ass or I can learn how to trade. So that was kind of the motivation behind that. I'm going to get back at the market. I'm going to exact my revenge on it. And I'm going to master this video game we call the market.
Yeah. So did you revenge trade Bitcoin basically, or were you trading alts to compound, or was it like you had your bag and you took a little extra money and tried to make it work?
2015. So let's say 2014, I just bag hold the whole year and I get mad. In 2015, I'm like, okay, we're going to learn how to trade. So I wasn't really sure how to trade at all. So I first got into FX very little, dabbled in it here and there, some pairs, but it wasn't as interesting. And I said, okay, if I can kind of learn how to master trading FX, which I couldn't at all, and we moved into Bitcoin. So I was really just buying and selling on Coinbase, catching the spreads, hitting the fees hard. And it was probably about 6 months later, I discovered BitMEX, the leverage product of the century, right, for crypto traders. So I started on BitMEX, just trading strictly the XBT perpetual swap pair. And that's kind of where I laid my foundation and kind of got where I am today. It all started on BitMEX and it still is to this day.
I mean, where did you get the initial money to invest? You were a college kid. So was it like, summer job money? Were you like selling crack on the corner? What were you doing to make it?
It wasn't nefarious like that. So I was privileged, save up my money from birthdays, Christmases, just random things like that. So I had, 20, 30,000 to my name, and I really just went all in with it and thought I was going to get rich. Of course, I didn't get rich in the moment. I got
you did, but just not yet. But that's a good lesson, right? I mean, patient. That's how markets work. It's a transfer of wealth from the impatient to the patient. So
100%. And that took a while to figure out. I was angry. I can't even stress that enough. I revenge traded I've lost so many Bitcoin revenge trading. I don't even want to talk about it from then to now.
Yeah. Did you, because you had kind of gone all in, did you feel like you missed out on any opportunities? Like as a college kid was like, I can't go to the bar, my money's in Bitcoin, or was it like, at least you were able to live your normal life?
Yeah, so that money, fortunately, my parents helped me through college. I wasn't financially stressed that I needed to make tuition payments, fortunately. So I have my parents to thank for that. So I wasn't, stressed outside, I can't go to the bar, I can't go to a party, this and that. I lived a relatively normal college experience. I did all the fun stuff. I look back on it today and said I had a great time, but on the side, I always had like this little bag of Bitcoin I didn't know what to do with. I just had it, and I knew internally I was upset over the price. So yeah, nothing really out of the ordinary with my college experience that led me to believe, okay, well, I can't have a normal experience, basically.
That's good. And you went to an Ivy League school, didn't you go to Cornell? Is that right?
So I went to Cornell for hospitality with a minor in real estate and finance. Hopefully now I'll never have to use that degree.
I was going to say you never used any of it. I have a Penn degree in anthropology, if it makes you feel any better.
That's the goal, right? You have it as a backup. Hopefully you never have to use it.
But I'm pretty sure that an anthropology degree is a backup for literally nothing. I mean, unless I want to go back and become Indiana Jones or like an anthropology professor.
You know what? That might surface as a profession. Who knows in the future?
You never know. I guess I have my shot. So obviously you started as an investor, you became a trader. Now what's your balance between the two?
So I consider myself a Bitcoin maximalist by default, right? But I am primarily a derivatives trader. If someone asks me my profession, I tell them I trade magic internet money on derivatives exchanges. So I'm more a trader than an investor, but everything I do is with the goal of just accumulating more Bitcoin. So that's why I consider myself a maximalist.
What percentage of your portfolio are you willing to trade with, and what percentage is, tucked away in cold storage?
Yeah. So, percentage of net worth. So first of all, just as, disclosure, 99% of my net worth is in Bitcoin. I know that's like a, gasping thing for people to hear, but I'm such a believer in it that I'm cool with it going back to my accumulation price of $800 and saying, okay, I'm 25 years old. I have a huge appetite for risk. Either this goes to the moon, it's a 6-7 figure asset class, or it goes to zero and I go find a job trading some legacy, finance job. But in terms of portfolio allocation, I don't trade with more than 10 to 15% of my cold storage.
Yeah. I mean, that's my approach certainly is not that high of a percentage of my net worth in crypto, but whatever portfolio I'm looking at, whether stock or whatever, I don't trade with generally more than 15. These days I'll push it to 20, 25 when it's alt season or, there's opportunities or things like that. But it's nice to hear that you have like that responsible approach. Yes. Because most people at your age, you started early, so maybe you've learned those hard lessons, but most people probably haven't gotten there. So talk about your trading strategy. Obviously, we'll get into the educational stuff that you're working on and your product, but we have a mutual friend in crypto ISO, Trip. Yep. Who I had on the show before, and I know that you guys have a similar approach to markets, which a lot of people find very, very interesting, the way that you sort of approach finding your trades and things like that. Can you talk a bit more about your strategy?
Yeah, so primarily I am a swing trader with a focus on trend following strategies and mean reversion strategies. So early on in my trading career, so to speak, I discovered an indicator called the Ichimoku Kinko Kyo, which is a trend following indicator that when I learned about it, just made a lot of sense to me. You see all these colorful lines and clouds and charts and moving averages, but the indicator is known as equilibrium at a glance. So in theory, you can open up a chart, throw on this one single indicator and have a full view of the market. It's seeing if the market's overextended, if it's underextended, is it at the mean? And from there, you can base a lot of your decisions. So as a swing trader, I want to make easy decisions where I don't have to spend my time staring at a chart, 18 hours a day. Even though I do, I like to actually live my life. So swing trading affords me the opportunity to play on a higher time frame, say the 4-hour, the 12-hour, and the daily, and focus on taking more high time frame trades that will take 2 to 3 days, sometimes a week, sometimes a month. But it's primarily about finding high time frame levels, support and resistance, right? That's the epistemology of any sort of trading strategy, buying support, selling resistance, and really just taking a view of a high time frame where I don't need to watch the intraday moves. I need to set alerts when price gets to certain high time frame levels, see what it does there. Is there an opportunity? Then I capitalize. So it's really more of a sit and wait, be patient, right? We talked about that, and then capitalize when the opportunity arises. So that's my primary strategy. Now, over the last 2.5 years, I've developed something called liquidity theory with the help of Trip that really kind of expands on what crypto is really driven on. So I've noticed during times where price is trending, Ichimoku is hands down my bread and butter. It's really good at capturing the meat of the trend, say about 70% of it. But there is a lot of percentage of the time where price is just ranging, right? We talked about, you come back over the weekend, what did Bitcoin price do? Absolutely nothing. So it's when it's ranging that I try to figure out, okay, I can't use my trend following strategy in a range bound environment, but I need to figure out how I can also make money in that market condition. So I developed something I called liquidity theory that aims to explain in a range why price moves the way it does and how and why. And that, what I believe, is strictly driven due to the liquidations of retail participants. There are obviously some larger players who get liquidated or so-called hunted. But the whole point is that the market, like we talked about, is a device to transfer money from the patient to from the inpatient to the patient, and they do so by running stops. You see SFPs, you see liquidations, all of this in a way to engineer liquidity for a bigger player to eat your lunch, so to speak.
Yeah. So, I mean, you're trading off information primarily in the derivatives market then, and somewhat ignoring the spot market altogether.
Yep, absolutely.
Which is interesting because, I mean, there are people who I guess would still argue that the spot market as a whole drives price, but that doesn't drive trading, right?
Correct.
It's not driving the liquidity in trading.
You have, spot should drive the futures price, but sometimes you have it where derivatives are leading the spot price. And that's where you have this inherent imbalance where traders can actually capitalize on that arbitrage opportunity.
Have any of the issues with BitMEX turned you off on the platform? Because I know that that's been where you've traded. You said that's where you started, and I believe that's still where you trade, correct?
It is still where I trade. So, you have to really understand, like, crypto is the Wild West currently. It's a nascent asset class. There are going to be exchange participants who've had a predominant share of the market. All the, bugs and issues people usually have with BitMEX are because they haven't learned the rules of the game, in my opinion, right?
Can't identify the cheaters yet.
So when you get stopped out on, let's say, like the bottom of a wick, it's usually because your stop is triggered by the last price that was traded. Mm-hmm. And that's a default setting on BitMEX for stop losses. Now, if you just change the trigger price to be the mark price or the index price, all of a sudden you see that the index doesn't go as low as the last price did, and you don't get stopped out. So there are little nuances that if you just take time to learn, you realize how to avoid them and then also use them to your advantage. So I've been trading on BitMEX the last 5 years. I continue to trade there. It offers me the most liquidity for what I personally trade.
I mean, do you think that they're counter trading their customers?
I can't with maybe yes and no.
Do you care?
I don't. I understand the risks involved with that, and I take that into account when I'm sizing and actually dishing out my risk per trade.
Right, but I mean, anyone who's traded there has experienced what you just sort of described, which is that extra $75 wick that seems to always be you. And I mean, you're trading with size, so. It's hilarious when you see like your average person on Twitter is probably trading 100, 1,000, maybe 10,000 contracts, pretending that like there's this manipulation to liquidate them specifically when they're such a small player, but you're actually trading hundreds of thousands, if not millions of contracts. So you are at risk of theoretically an exchange seeing your orders and sweeping them purposely.
Absolutely. Right. And that's why you have this understanding that if you are one of the bigger players, you do tend to get hunted because there's a lot of sentiment analysis tools out there now. But it's an inherent risk you take. You're trading against other traders. Everyone's goal is to make money for themselves. Your stop loss might be someone else's entry or their liquidity. It's just being aware of it that allows you to kind of protect against it.
I always joke that I've said that 100 times, like your stop loss is a whale's entry. I mean, you just said it, but it really, there's a reason that you avoid those specific, areas. So when Bitcoin is trading extremely tight, which happens to be the case now, but probably won't be when we release this, do you step away and do other things, or do you still basically just play those 100x leverage, stops and find that liquidity and just, take smaller positions and trade? Or do you really stick primarily to the swing trading?
So my bread and butter is swing trading the higher time frames. When price is this tight in a range, you size down. As a trader, you have to know when to size up and down. That's the hallmark of any profitable trader, I think. So as price gets in this tighter and tighter range, we're closer to the resolution. I'm assuming it's going to resolve within the time we release this. You size down knowing that if you're offsides, the downside risk outweighs the profitability. There's just no reason to punt large sizes in this tight 1% to 2% range, when if you get caught offside, you're going to slip $500 and that's going to take quite a hit on your portfolio. So for the most part, I step away. If I have a few trades I take them. But other than that, it's really just being patient, right? You position yourselves before this tight range, so when it happens, you're on the right side or you're not getting burnt.
So I hear you talking about sizing up and sizing down. So clearly that means you have an understanding of risk management and you think it's important, which, I'm one to always preach that kind of all the things we just talked about, your trading strategy, your entries, your Ichimoku clouds, none of that matters nearly as much as the way you manage your portfolio and the way that you manage risk. So and it's funny because it's sort of a meme, like don't lose 1% on your trades. That's like the one like basic risk or more than, risk management strategy everyone has. But it's important to understand that position sizing, what you were just talking about, is really a huge part of risk management. So you can talk about that specifically, and then just your general risk management strategy.
Yeah. So overall, I actually consider myself a better risk manager than I am a trader. And I take pride in that just because, trading will help you make money, but risk management will help you keep it, right? So profitability comes with the territory in the space. It doesn't matter what markets you're trading. Eventually you go on a hot streak. Eventually you go on a losing streak. There's a non-0% chance that you go on a 10 loss losing streak. It just exists. It's theoretically, statistically there. And knowing
like 30.
And knowing that, you should keep that in mind, where if you're on a hot streak, there is a real percent that you're going to start losing drastically, continuously. So by knowing how to size appropriately, so my approach has always been, I use a modified version of the Kole criterion for actually sizing my trades. And that's based off a larger data set of trades that I've gotten. And based on their R multiples and my win rate, I come up with the optimal sizing. So maybe it's between 3 to 8%, and then maybe sometimes it shows 20%, but I'll use a modified version of the Kole criterion, maybe the 80-20 rule, to say, okay, that 20% risk should actually be 5% only. So my approach to risk in general, it keeps it between some low single or high single digit or low or high single digit, low 2-digit percent risks. And then when it comes to sizing, sizing is literally what determines profit and loss. And that kind of plays also into leverage, right? I think leverage is a huge misconception in the space, where leverage is a tool used to mitigate third-party risk by keeping less funds on
money on your exchange. Yeah, of course.
Exactly. Or on the second or twofold, that you use leverage to actually capitalize on multiple trading opportunities across different asset classes without tying up your balance in one single trade. So when it comes to sizing, you just have to know based on the market conditions you have, because not all markets are the same. Sometimes it's volatile and trending, sometimes it's not volatile and trending, sometimes it's ranging volatile or non-volatile ranging. Knowing the difference tells you what conditions you should actually be sizing up in and sizing down in. Right now we're in a range with low volatility. I don't want to be sizing up there, because the minute volatility upclicks, I get burnt. So it's knowing the market you're in, I think, that really dictates the whole risk management aspect of it.
So you talked about the inevitability of, win streaks, lose streaks, and how that plays into it. What was your worst losing streak that you can recall?
I remember last year, it was actually after 2019 topped out at 14K. I went on an 18 loss losing streak. So it was clear as day. I was longing a downtrend for the longest time. I couldn't get out of my bias. I couldn't get out of my own way. But I'm happy to report I lost less than 18% on my account because of my risk management. So every time I lost, I actually sized down from, let's say, 2% to 1% to even 1/3%.
My man.
So I kept losing less and less. And I'm okay with that, because I made that all back plus some.
Right, but what do people do when they're playing blackjack in a casino and they go on a losing streak? I lost 25. I'm putting up 50 because I need to get it. Oh, I lost that 50. I'm down 75. I need to put that.
And then you're liquidated.
And it's completely it's intuitive. It's not counterintuitive, because I think that's what people's intuition tells them, but it's counterproductive. And I think people don't realize that on a losing streak, you progressively size down, not up, because otherwise you're just pushing, bad trades to increase your losses.
Exactly. And it's that mindset of I need to make X back. That kills you right then and there. That's when you should walk away from the computer, take a week off, whatever the case is, because trading is an extension of you. If you're not in the right mindset, you're not going to make money. Whether you believe it or not, you're just not going to.
I think that's one of the biggest problems in this market is that mentality that you just described, because there's so many people who lost so much money in 2017 and 2018 who still in 2020 approach the market with their, the goalpost being getting back to what they lost, as opposed to just scratching it, saying, this is my new portfolio and I'm going to approach it as if this was right. Do you think that that's true? Do you
100%. I know people who've, they made millions and they trade like they still have millions, and they get liquidated every time, even on $100 account. It's because they can't get rid of that mindset. And it's the most upsetting part for people, is that they think they had something, the bubble's gone, the peak is gone for right now. They're not there yet, and they're trading with that mindset. But realistically, what got them to that height was not good risk management. I promise you that. Anyone who turned, 10 grand into a couple million during the 2017 run didn't do it because they're great traders. They did it because they were lucky riding a bull market, which is fine. But you need to understand that in order to move forward.
Yeah, well, everyone's a genius in a bull market, and that mentality, like you either accept that that's what the case was, or you think you're still a genius and continue to lose all your money.
And you keep getting help.
Yeah. So, well, what's the old adage? There's two kinds of traders: those who are humble and those who get humbled by the market. You end up in the same place no matter what. If you're successful, you will be humble. It's just a matter of how much you lose before you get there. So obviously, your shit, and you've moved into obviously education, and you're launching a platform soon, I know, which probably will be by the time we launch this, called Tools of the Trade. Right. I guess, can you tell us about what the platform is, and then I guess more importantly, why you're choosing to do that?
So it's twofold, right? I want to start off with kind of describing how the idea came to fruition. So I've always enjoyed educating people in this space. I started a Telegram, well, first it was a Slack community in 2017 called Crypto Insiders. And it happened because I didn't have people to talk with in college about cryptocurrency, but I always loved it. Like, I just want to talk about it all day, but there's no one to talk with. So I found Quora, which is a platform, if you're not familiar, where you answer questions, people answer your questions. And that was a platform for me to actually share my knowledge and show that, hey, I know what I'm talking about and I want to learn more from other people. And people started taking notice on Quora. And at one point, I became the #1 specialist answer for cryptocurrency on Quora. And people are saying, hey, do you have another platform we can talk more frequently? So I started a Slack group at the time of 2017 called Crypto Insiders, just came up with the name. And there were about 300 people at first, and then it blossomed into 1,000, and then 1,500, and there were 1,500 people, all from Quora. So they're all really bright minds in general, because I think you really usually are an intelligent person if you do come to Quora.
Yeah.
It's just the type of people it attracts. And I started this group, and we just, on day to day, just talk to people. They would ask me about the actual cryptocurrencies and the blockchain, but then more specifically about trading. Where do we think price is going to go, etc. And I was sharing my thoughts, and people liked it. So from there comes, the 2017 top. We top out, cryptocurrency is dead. People aren't talking in the Slack group. And it's probably a year later, I started back up on Telegram, because that was where everyone seemed to be going.
Yep, Discord and Telegram.
Exactly. So we started back up on Telegram. There were 100 people at the time. And slowly but surely, just me sharing charts and my understanding of the market, word of mouth grew, and it blossomed into now 5,000 people about a year and a half later.
That's a great group.
It really is. And what I love the most about it is that there's no bullshit. It's very low shit posting. It's really driven towards analysis and teaching one another. So I've always felt that if you can teach someone to do what you're doing or explain things as if they're a first grader, you're showing mastery over a concept. And that's what I love to keep doing, is testing myself and make sure, do I really know my shit? Because if I can explain it to you and you can do it yourself, that shows that I have mastery over it. So that's kind of also where I met Trip, and I'm kind of segueing the question. He was also someone sharing his insight in the Crypto Insiders community, and we kind of came together and we would talk on a regular basis, discuss the market. And I always like talking to people who I feel that know their stuff. So we kind of hit it off. And from there, we kind of decided, what can we do to provide the community more value? Because I can only answer so many questions a day in Crypto Insiders, and I never mind it. It's always great. But there has to be a more formal way to actually get this education to people. So that's when the idea came up for Tools of the Trade, which is, in a space dominated by paid groups, which again, I have nothing against, everyone to each their own, but in a space dominated by paid groups and spoon feeding, where, here's my target, here's my stop loss, here's my entry. What if we can actually teach a man to fish for himself? What if you can give him tools to actually find financial freedom for themselves? So I'm fortunate enough to say I've attained financial freedom on my own through trading. And I really feel that if you have the drive and motivation to do so, you can actually achieve that for yourself and what it means to you. It might not mean tens of millions. It might not only mean a couple 100,000, but learning to trade for yourself is a skill, right? And if you have the dedication and patience and really want to do this, I think the Tools of the Trade is a perfect platform for doing so. So the Tools of the Trade is really a 4-part curriculum, and we call it a curriculum because it's really 4 different courses that are aimed to take a trader or even someone completely new to the markets who may have never even seen a chart, a trading view chart or a candlestick, and bring them up to speed, cut that learning curve in half, bring in the risk management and say, okay, now we've brought you up to speed with all the skills to actually do analysis, and then teach you the actual operational tactics of actually trading. How do you go about trading? How do you journal trades? How do you make a trading system? So it's really this full encompass curriculum to bring people up to speed, whether you're a new trader or a veteran trader, and really fine tune your system.
Do you still journal?
Every single day, every single trade, no matter what day it is. I've been doing it for the last 3.5 years consistently. And I can't like stress enough how much that's improved my profitability.
Can you tell, like, why? Is it because you are able to like give yourself an honest appraisal of the mistakes that you made? Is it because it basically forces you to look yourself in the mirror and,
It's more the latter, because, if if you don't know yourself coming into trading, it's going to be a really humbling experience to find out all your character defects and flaws through trading. So by journaling, it's really like a self-reflection, right? So you're being honest with yourself, not only, okay, I took a great trade.
Dear diary.
It's like, how am I doing mentally? I journal my hours of sleep. Did I eat? Did I meditate the night before and the morning before? Did I exercise? All these exogenous factors that kind of play in. Am I in a good headspace to trade today or not? And I notice what ties my winners and my losers together. So, for example, from my past journal reviews, I know when I sleep 4 hours a night and then I hit the charts the first thing in the morning and get into a trade, I'm more likely than not stop out before it hits my target. And why is that? Well, maybe I'm a little cloudy because I only slept 4 hours the night before. And then for a winning trade, for example, I've noticed that I always meditate the morning prior, and I always have my workout in the morning right before the trade actually enters. So maybe that's just a random fact or a random coincidence, or maybe not, but at least I'm tracking it. And that's the point. What gets tracked gets improved. That's kind of the philosophy I've always held for that.
You're obviously built for trading though, because I think that 99% of people who trade don't even consider the outside factors of their life and how it does affect their trading. I do. Those were hard lessons learned. Same thing as you, because like I have ADHD, so I can tell you like if I've drank coffee or not at the way that I approach a chart. Or certainly like exercise for me is the single most important factor for me probably in having focus. So if I haven't exercised in a few days, my trading and my analysis are garbage. But it speaks to the fact that even people, you're selling a trading course and you can teach them everything in the world. But I believe, that still a majority of people do not have the temperament to do it or the discipline, no matter how many things you teach them, right? Because they're just either they're inherently gamblers or they're just too emotional for it. I mean, do you think that everyone can learn to be a trader?
So it's a loaded question, because like throughout the curriculum, once you get into the third course, we actually teach you about getting into the trader's mindset, emotional control, using techniques like meditation. I even walk you through actually some meditation techniques, because I do think it's a skill that can be learned if you want to. It's nature versus nurture. I think nature, most people have a inherent ability to succeed at skills that they apply themselves to. And then you really just need to nurture that with the right tactics. If you teach a gambler before he's a gambler risk management, it's much less likely he's going to be a gambler, right? He's going to apply the principles from the get-go. And that's the goal, right? Building them up from the beginning.
That's interesting. It's funny because obviously, like, here we are on my podcast. I'm a trader first. It's how I make the most of my money. It has for years, but I get the constant criticism the minute I do anything else that has any sort of monetization or value to it, that I must be LARPing. I must not be a real trader because I'm trying to make money in other ways. And if I was really a profitable trader, why do I need to have a podcast, or why do I need to have a newsletter? Have you seen any of that sort of pushback from the community even before you've launched, but talking about doing this?
Yeah, so that's kind of been the stigma behind crypto Twitter. And I really think it's really specific to crypto Twitter because of
because it's stupid.
It is. And don't get me wrong. I've thought about that for the longest time. I was against monetization of my brand, community following, etc. Because of that. But, in the late, couple years, I've come to grown that like, I'm a trader. I make my profits from trading, but there's nothing wrong with amassing more wealth. That's just something I've kind of gotten greedy over for myself. My goal has always been to accumulate 100,000 Bitcoin. Like that's my goal in life and as net worth, not, to be a billionaire, but to accumulate 100,000 Bitcoin. And if there's another avenue I can take where I'm not selling vaporware, I'm actually empowering people and it's a good product for someone to actually use and grow and gain from, I'm not going to feel bad at the end of the day that I helped someone else achieve financial freedom and I'm monetizing my own brand, following, knowledge, et cetera, et cetera. So it does get a bad stigma. I think as the space becomes less nascent and people grow to accept this as an emerging asset class, we're going to see less of that. People monetize because they're able to, and there's a client or customer who's willing to pay for the knowledge, experience, whatever you have. And there's nothing wrong with that at the end of the day.
ROUNDLYX.com is one of my favorite companies in the entire crypto space. What they do is take all your small purchases and round them up to the nearest dollar and invest that spare change into any of over 30 crypto assets of your choice. They integrate with your favorite exchanges so that you can view various exchange balances all in one dashboard and round up into different assets all at the same time, and they do all this without ever holding any of your Bitcoin. This is by far the best way to dollar cost average into Bitcoin. Go to ROUNDLYX.com and use the promo code WOLF for $4 in free Bitcoin after making your first roundup or purchase. That's ROUNDLYX.com and code WOLF for $4 in free Bitcoin. Are you sick of paying ridiculous fees to trade crypto? It's time you try Voyager. It's hands down my favorite place to buy and trade crypto, and it's 100% commission free. Voyager gives you easy access to more than 30 top crypto assets, and you can instantly transfer cash from your bank account so you never miss a trading opportunity. Even better, you can now automatically earn interest on your crypto holdings. Currently, they're offering 5% interest on Bitcoin and 6% on USDC. Yes, you heard that correctly, 6%. And there are no limits or lockups, which means your funds always stay liquid. Find out why so many people are making the switch to Voyager. Visit investvoyager.com or search for Voyager on the iTunes or Google Play Store and get $25 in free Bitcoin when you use the promo code SCOTT25. That's investvoyager.com, promo code SCOTT25 for $25 in free Bitcoin and start trading today. Yeah, and also, I mean, a real trader knows, as we've talked about over and over, that you're going to have bad runs, you know, so maybe you've attained financial freedom and that's not a problem for you because you have it to fall back on. But a lot of people who are trading and are, you know, grinding it out like a poker player and making their daily wage or something, if they go on a month-long losing streak, they're really going to be broke or they're going to be in big trouble. I mean, it seems like common sense that anyone who can should have multiple revenue streams, especially if some of them are passive.
Very true. And that's kind of the thing, because as traders, you sit at the table every morning at the chart and you make your daily bread, right? But if you have a bakery making the bread for you, you can just pick up a loaf every now and then. I don't see an issue with that. And I think, again, as we move on, crypto Twitter will evolve and get more mature, so to speak, and the stigma will diminish, in my opinion.
How much do you think that crypto Twitter and that sort of immaturity affects the you know, outside perception of our space? Do you think that it does? I mean, I'm not saying that like Jamie Dimon or whatever, like from JP Morgan, checks on Twitter and says, wow, these guys are clowns, Bitcoin's crap, you know, but do you think that it has a negative impact or a positive impact on the space?
If you think of like the history of cryptocurrency in the industry, right? We came from people talking about the Silk Road, using it to buy drugs and guns and even human trafficking, whatever the case is. We've transitioned to, okay, well, people use this, you know, to evade taxes and hide and launder money. Well, okay, it doesn't really work that well, actually. It's not that much of an anonymous blockchain. To now we have this culture on crypto Twitter that either you're LARPing or you're a millionaire, either you're a maximalist or you're not, a no-coiner, whatever. Like, it puts people in different factions and silos it off. So as an outsider coming into the space, I'm sure they're taken aback by the different warring tribes, so to speak. But I think as the space grows, Twitter will become more conformed, and I'm hoping that we have less of a stigma, less of an immaturity attached to that. Because yeah, it is kind of tough for a newcomer to look at crypto Twitter and be like, there's a lot of anonymous characters, there's a lot of non-anonymous characters, everyone has an opinion, everyone's shitting on each other. It's wild. It's like high school. That's like the best way.
What are these memes?
Yeah, exactly. It's high school and everyone has their different cliques. So I think as we transition to a more accepted asset class, that those personalities, stigmas, cliques will kind of mesh into more of a college body, so to speak.
Yeah, makes sense. Also, I mean, you know, inherently the audience will just age, right? Yeah. I mean, there's, you know, it's like I'm 43, but like you're in your 20s when you and all the people who are your age and started at the same point are 35, they might be a little less likely. I'll give them a little credit, a little less likely to you know, post Pepe memes.
That's the thing.
Yeah. So tell me about Zoran. Yeah.
Sorry.
Please.
Who are my age, millennials, they're going to call them, have made a shit ton of money, and they've done it very easily without much work, so to speak. So they feel entitled to enact their immaturities in crypto Twitter. And I think that's really the driving factor behind the CT culture the way it is you have a lot of young kids my age or older, younger, who are, you know, blatantly stupidly rich at this point, where they look at people who are just coming into the space, a hard worker, doing whatever, and they're like, well, you're not as rich as me, fuck you, right? And I think that immaturity will hopefully diminish as they grow up.
Right, or even the flip side, and then you mix that with the people who are dead ass broke and bitter who are the same age, right? So it's that makes for interesting, So totally flip topics. Tell me about Zorax Capital.
So Zorax Capital is an interesting one. I started it in 2015, and originally it was really just an offshore entity for tax optimization to trade my cryptocurrency holdings. But then in 2017, it kind of took on a new light where there was the ICO craze, right? I remember trying to get into all these ICOs, these private sales and seed sales.
Which is tough as an American.
Of course, so that too. And that's why it's an offshore entity, because you couldn't get in as American. You couldn't get in as American business either. So Zorax Capital took on this pseudo VC approach where we're this, offshore entity. We're really interested in investing in some of these new ICO projects, and I'd get favorable seed round terms or private sale terms for getting into these ICOs. So it became a two-factor where I could use it to trade my, regular portfolio, but I could also use it to get into some of these incredible ICOs that would either go 40x or they'd go negative 80%. So it was twofold. Yeah.
As the law of averages. That was everyone's approach. I feel like in 2017 was like, I'm going to buy 10, 9 are literally going to 0, but one's going to do 100x. And I'm good, right? It worked out for some people, I guess. But
it depends if you did 2016 to 2017, it was fine. But if you did 2017 to 2018, you caught the back end of it where you just got burned.
Yeah, just
I did my fair share of shitty ICOs where I literally just threw away hundreds of thousands of dollars at vaporware, and to this day they're down negative 99.9.
Yeah. I found like bags of wallets that I was like, wow, I forgot that I own that. Yep. Now 37 cents worth of this coin.
My $10,000 investment.
Yeah. So do you, I'm going to assume since 99% of your money is in Bitcoin that you don't trade other markets.
No. So I've always thought about, transitioning to legacy or FX or whatever the case is. It just never had the volatility back when I was trading crypto that I tell myself, I wanted to diversify.
Now.
It does now for sure. But, there's also that approach where fundamentals are actually a big piece in legacy and FX, where fundamentals mean jack shit in crypto. It's entirely.
I say that all the time. People get so mad.
It's technically driven or it's flow driven. There's no fundamentals. There's pumpamentals, but no fundamentals. And that makes it easier for me to trade personally. So I like to stick where my bread and butter is. I'm a product of crypto. I like to consider myself that I'm just going to stay in crypto because of that.
So I agree. It's a technically driven market, which I don't think, people argue with it, but it's hard to argue with it when you see Bitcoin sneeze and move 5% and every other coin reacts exactly the same way. So you can't really argue that because Link did a deal with Samsung this week, but still gets destroyed by Bitcoin. There, fundamentals, these companies, there are fundamentally good things about them and they could, but as a trader, it's very difficult. So that said, do you think that we're approaching a time, there will be a time when there is a bit of a decoupling where certain altcoins or projects could, prevail and become real players?
Yeah, so I've always held the belief, at least the last 5 years, that altcoins, also known as shitcoins, like their sole purpose is used to accumulate more Bitcoin during periods of sideways, right? So you follow the capital inflows, people use dollars to buy Bitcoin, and then they use the Bitcoin to buy altcoins. And therefore the alt BTC pairs pump to a certain point. And then I have this other theory where they'll exit the altcoins, right? They'll sell them for Bitcoin, Bitcoin pumps, and then they'll sell their Bitcoin for dollars. And then it all crashes and recycles. So it's always been a means to an end for people to accumulate more Bitcoin. Now, in the future, are some of these projects, and by some I mean maybe less than 1% of them, actually going to become fundamental companies that have real revenue sources and have realistic valuations? Maybe, but until I see any of these companies start picking up balance sheets that actually show revenues from other companies or whatever their main source of revenue is, I think it's an entirely speculator-driven market. And until we get that real world adoption, like real world adoption, and you see companies making money for a balance sheet, you're not going to have anything else other than the fact that it's used for accumulation of Bitcoin. But it might happen.
In the late 90s, early 2000s, when I was your age and you were 4, we had the obviously the internet boom and busts, bubble pop or whatever, and we saw a few companies emerge as absolute beasts, and become the most valuable companies in the world. And there was sort of this culling of the other 90-something percent. And I wonder if that may be sort of what the future looks like.
I think it would be. If you look at what, you talk about Link and there's some other ones, maybe some exchange coins, etc. There's going to be less than 100 of those companies that actually make it out of the 10,000 now we have. But even of those 100 companies, maybe 10 of them will actually stand the test of time, and you'll see them in decades from now. So if you watch this podcast 10 years from now, will those companies still be there? You might have never heard of them, right? So we'll see.
Right. And the thing is, some of the companies could succeed and the coins could go to zero still. So
exactly, because they're not attached.
It's not like you're not buying stock. People don't, it's not stock. I mean, that was like the biggest sign of the 2017, 2018 bubble pop. I remember my friend Jason, we were like talking, and he was like, well, my nanny just came, to work for my kids and said that she just bought a bunch of shares of Ripples because like CNBC told her how to buy it or something. And I was like, oh my God, it's over. Shares of Ripples. It was plural, Ripples. So we talked about when you got into it, and that like you saw it as a money-making opportunity, but the maximalist sort of approach, did you have a really like strong belief like that, the fiat money system was going to collapse or any of these, or that this was digital gold or the store of value? What was the narrative that got you into Bitcoin, and what is your narrative about it now?
So the narrative that got me into it was definitely the idea of digital gold, a store of value. I haven't bought into the world reserve currency just yet, just because it's not as quick and efficient as a dollar would be, or even some of these other shit coins, like let's say just Ethereum, just to say like you can do a quick transaction on Ethereum where it takes 10-minute block times on Bitcoin. But the the narrative to start was a store of value, because I kind of looked at Bitcoin as this Swiss bank account that you can put in literally just inside your head. So the idea that you can cross borders with nothing but a piece of paper with your private keys, or even if you just memorize them, you can cross borders with billions of dollars and access it anywhere in the world. That idea is what piqued my interest, because you don't need to launder money. You don't need to hold money, physical money. You can literally move from country to country, state to state with billions or billions of dollars inside your head. And that was powerful to me. So that was, in my mind, like being your own bank, you have a store of value. If there is inevitable future inflation, as obviously now, especially as we see the money printer go burr memes, the Fed just keeps creating money out of thin air. That value proposition to me, that Bitcoin is a hedge against inflation or the collapse of the fiat currency, makes more sense now over time, especially this year. And to this day now, it's more of digital gold in my mind. It's a store of value. It's a new asset class that you can invest in, and it'll hopefully appreciate more than gold or any other of these uncorrelated risk assets.
What do you think about the legacy market right now? Talking about that, I mean, obviously you don't trade stocks, but I mean, these days you can't trade Bitcoin without at least being aware of what's happening in the stock market. But like, what do you think the future looks like with the quantitative easing and infinite money printing and all of these things?
So, I never used to look at an S&P chart till probably the last 6 months to a year ago. The correlation is undeniable at some points in time. You see, Bitcoin and S&P move in lockstep. In terms of where legacy is at, I've been looking at those charts a lot more lately than I have before. I think that at this point, we're in this phase of complacency, right? So I think if you're talking about, the Wall Street cheat sheet little chart, we're in complacency where in my opinion, we've kind of hit the peak. And now this is the second lower high where everyone's complacent. Everyone's like, it's all good. Fed got our back. They'll continue printing money. And I bet you that the indices will continue going up, but it's not a matter of if they'll stop going up and it'll stop. If the music will drop, it's a matter of when the music will stop. And usually when the music stops is when people are the most complacent. All your bears turn bull, all your shorts close, all the liquidity above is sourced. So I can't say for certain when it will happen from a timing aspect, but I do believe, the decade plus long bull run that the legacy markets have been with have hit a nail, and they need to kind of refresh. So we'll see what happens over the next couple of months, years, whatever, but I think we're at that complacency phase.
I agree with that. So, we talk about correlation, and yes, they obviously have moved at times together. I mean, I think we have 10 years of evidence that Bitcoin has outperformed the market tremendously. What do you think happens to Bitcoin if we do see that true, confirmation that the stock market bull run is over? Which, I mean, we saw that confirmation to some degree, but yeah.
Exactly. So I think at this point, everyone's waiting for the decoupling, right? I put a tweet out, I forget, like during the March crash, that the decoupling will not be televised. So I think for a large part of, if we do top out and the markets do make a lower low from this recovery in March, we're going to see a period where Bitcoin does sell off. I personally held that we're going to make a higher low, however, on the charts. Now, whether or not Bitcoin actually decouples after we make a lower low remains to be seen. I'd like to think it does, though. I think that there's enough smart money in this space that has a vested interest in pushing the narrative that Bitcoin is a store of value, especially when the whole legacy market is crashing. So I'd like to think that if we have another one of those, quote unquote, black swan events, that the price of Bitcoin will at least be resilient to the downside of the legacy markets. And I think that resiliency will be the first indication of a decoupling.
I hope it happens. I would hate to see us, in the what's. So I got. No. Are you hearing that through here? By the way, I'm just pausing because I'm getting a FaceTime call through my computer. I'm gonna have to tell them to edit this out. He'll hopefully hear it, but yeah, it was. I don't know if it affected the recording. It's coming in my headphones, but hopefully not. So maybe you didn't hear it. Starting again. So 99% of your net worth is in Bitcoin. Does that mean that you spend Bitcoin regularly? I mean, is that how you transact?
So I've always been under the impression accumulate as much Bitcoin as possible, right? My goal is 100,000 Bitcoin. So when I make any of my profits, since they're mostly on BitMEX, obviously, I only sell what I need month to month to pay my rent, credit cards, etc., standard of living. I would rather sell in the month that I need money rather than sell, couple years ahead or whatever the case may be, just because I'm such a maximalist. There's obviously some capital gains implications there if I do sell more than I actually need in the moment. So I try to really anything I need from a month-to-month basis is paid OTC with Bitcoin. I sell it for cash, pay my bills, and then move on to the next month.
So you do it OTC? You don't do it on exchange?
Correct.
Can you talk about what that process is like for people who don't understand?
Yeah, so OTC is over-the-counter transactions where you basically, when you have an amount that you don't want to get slippage on or you want to get favorable spreads on, it does pay to have some sort of relationship with a OTC desk, a trading desk essentially. So there are a handful out there. I won't name the ones I use, but basically you do a transaction, you lock in a price, and then you transact. It's like doing a market order with an exchange, except the time to settlement's usually like a day later because of the way banking works, right? So I do my OTC transaction with a favorable desk. I use this desk specifically because I won't name their names again, but there was a period of time where they did a wrong transaction where they accidentally sent me 200 Bitcoin by accident for a much smaller amount. And I was obviously gracious enough to send that back to them for the correct amount. But the point being is because of that little slip up, I now have
earned a trusting relationship.
Exactly. So in my mind, it works better to go through an OTC desk. But for the average retail trader, right, I see nothing wrong with a regular fiat off-ramp.
Every time I've been down the OTC path, not selling and buying, but trying to help people, source large deals and things like that, it's just incredibly, horribly scammy rabbit hole. Nobody's serious. And you get right to the end, and then it's a game of chicken. You show me yours, I'll show you mine. And nobody wants to prove they have the Bitcoin. Nobody wants to send the funds into escrow.
Proof of coin. It's a round robin, right? It is a very scammy space if you really move into the OTC side of trying to negotiate deals with people. And that's why you really should only use reputable trading desks or well-established market makers in the space.
Do you think that we're going to get to a time when you don't need to cash out and you can just pay your rent in Bitcoin, or you can just, pay those bills? And
so I definitely think you'll be able to. Now, would I want to? Probably not, though. I don't know that I'd want to use Bitcoin for day-to-day transactions. I really don't. I think I'd rather use it as a portable Swiss bank account that you access infrequently, and then make one of those, I'm not going to say Ripple or Ethereum, become those methods of transfer of choice for people to do fast transactions, right? So maybe it would be a digital dollar, for example. But Bitcoin itself, I don't think will ever be used in peer-to-peer transactions on a daily basis, for example.
Funny, because there's a lot of maximalists who would hate to hear you say that, because they still perpetuate the narrative that it's a good, form of money for transacting. And the fact is, it's crap.
Yeah.
I'm assuming you've been there, but I mean, I've had it take 2 days to get Bitcoin from someone before. In 2017 when it was going nuts, I mean, you couldn't move it. It was jammed up. And I mean, there are just much faster cryptocurrencies, which, and beyond that, that now leads to sort of DeFi, but the rise of stable coins in general.
Exactly.
And I believe that stable coins have effectively killed the use case of Bitcoin for actually transacting, because
100%.
Who wants to send something that might be worth 30% less by the time it arrives?
No one. And that's the overarching fact, is that stable coins should do what they're intended to do. And I don't think any of the other currencies attempting to be, money transmitters like Ripple, for example, have any place in becoming that, because the likelihood that Ripple gets adopted before the US creates a US digital dollar is so minuscule that the idea of investing in Ripple because of the price appreciation that it's going to be used as a stable coin is kind of wacky in my mind.
Yeah, the Ripple narrative is dead done. And even if you like the narrative, you cannot ignore the fact that every single time the price rises, they move money, they move XRP to an exchange and dump on you. It's just, it's fact. So if you're going to be bullish on it, you have to believe they're going to run out eventually, right? or not want to ever sell. So, you're a bit of a Bitcoin whale, and you're not anonymous.
No, I'm not. I've actually talked about that with a security advisor. I started out.
I was just going to ask how you approach security, so go ahead.
Yeah, so I talked to the security advisor before I kind of went on Twitter and even on Quora with my actual face and name, etc. I have everything in my life secure. I'm not going to talk details, but everything that I own, everything that, my security is not my priority, and I have that unlocked. So when I came out on Twitter, there are a few other, notable figures who are also not anonymous, like yourself and some other podcast hosts. We have it unlocked. I'm not worried about things like that. Now, do I go around telling people where I live, what I do, etc.? No, but I do, to a great extent, secure myself. And as long as I feel that I've implemented those security measures, I feel fine being on Twitter. Here's my face. Here's who I am. Here are the charts I share. And here's me, talking to you day and day in Crypto Insiders.
Have you been targeted? Like, have you been SIM swapped or hacked? Or...
So I've never been SIM swapped, thankfully. I don't think anyone could at this point because of the measures I've taken, but I've never been directly targeted. Not that that's an invite to target me, but I have my shit unlocked, for a better way to say it. Yeah.
Right. I guess if it's so clear that you're secure that, because I was SIM swapped, and I wasn't at any point really particularly worried that they were going to actually get my Bitcoin.
Yeah,
but it really messed my life up for a long time because of all the other things that they find and expose. I had a conversation with, Jason Williams from Morgan Creek, and he was talking about, being SIM swapped 8 times and, credible threats and guns and hijackings. And, it's an unfortunate part of this.
In this space, unfortunately. Yeah.
Yeah. So, but you don't worry. You're
honestly, no, I just don't. I'm not even going to say anything more on the topic, but no, I don't worry.
That's good to know, because I think very few people at the top of this game sleep very well at night. So it's nice to hear that there's some. I do, you know what I mean? Because also, like, I don't have 99% of my money in this, it's more like, but like I basically have personal concierge security on my phone and all of those things to make sure that I'm, protected. And it's unfortunate that you have to take those kind of steps and lock your life down like Fort Knox, because Warren Buffett lives in his old house that he's been in for 50 years and nobody's trying to hack him for his billions.
Yeah, it's a different day and age, and I think people are going to not transition to doing things like that, but the higher your status or appearance in public eye, the more you have to be secure. And I think that goes for, even paparazzi and actors that go together, executives in different firms. It's part of the game. You understand it. You take the measures you can, and then whatever happens, happens.
Yeah, there's a lot of things that that people don't consider, I think, and it's not really an issue at your age, but as you get older, there's not just the security, but there's how do you pass your crypto on? What if the person you're passing it on dies in the same car accident as you do? What happens to it then? And I think that there's a lot of room for improvement in the processes for that, and probably actually going to be some great companies that
that is the good use case. A good crypto company use case is creating these dead man switch, so to speak, that actually do what they're supposed to in a trustless and without a middleman.
Yeah, you don't want to fight over your private keys when you're gone, unfortunately. So, we talked about how you approach trading and meditating and all the things that you do to sort of get yourself in the right mindset. All that said, do you ever just get raging pissed off and throw your phone across the room on a trade, or have you really eliminated the emotion?
So in the beginning, at least the first year and a half, 2 years, I raged so often. I can't tell you again how many Bitcoin I've lost rage trading because of it. Just because I've been in profit, a nice amount of profit, I get greedy and it runs all the way back to my entry and then stops me out, or it was going to stop me out and I move my stop even lower.
I've been there. Yeah.
Runs me over and I've raged, absolutely. But over the last several years, I've really learned to detach emotions. I think that's one of the biggest keys in my personal trading success is I've always treated trading like a video game. It's a game that I learn the rules, I apply the meta, and then I win, right? And by emotionally detaching yourself from how the market goes up and down, whether it's profits or losses, by removing that emotional attachment, becoming more stoic, you have less of an issue dealing with and processing information as it comes in. So also when it's sizing, right? Like a person might say, okay, well, it's only $100 risk. I have a $10,000 portfolio. It's 1%. But then what do you do when you're risking $10,000 on $1 million portfolio, right? The process has to be the same. And the more you can emotionally detach and look at it from more of a systematic way, the easier it is to actually handle wins and losses. You don't get too excited about the wins. You don't get too down on yourself on the losses. It's a game that gives and takes at all times. And just knowing that has kind of helped me work with meditation, work with my experiences to kind of gain this emotional mastery over myself.
Outside of trading, are you a competitive person?
I'd like to say so. I used to play professional games, shoot 'em ups like Call of Duty back in the day when I was actually in middle school. So I've always been competitive from a gaming standpoint. I just like to win at things in general. So yeah, I'd say I'm a competitive person.
Because it's funny. It's the same for me. Like I really could not care less what happens in a trade, but I'll legitimately get pissed off if someone beats me at fantasy football, which is something I have zero control of. It's not like I'm out on the field. I shouldn't, but I hate losing. Yeah. Like, I grew up as an athlete. I just, I always want to win. And so I think that was one of the hardest things to detach, but trading is just not like that. But like you said, also, there used to be a thrill attached with trading when you made money. And by eliminating the downside, by eliminating being upset, you also unfortunately get rid of any of the excitement that comes.
But that's when you make the most money too. Yeah, when you learn to detach yourself, you don't ride these highs and you don't, scoot down on these lows. It's what actually helps you look at things objectively, because you can't force the market to do what you want, right? You need to be objective in everything. It's what's there. It's what's actually happening right now. If you're like, no, if I do this, I'll get lucky. It just doesn't work that way. And the sooner you accept that, the sooner you can actually start playing edges to your advantage. Statistically, that, hey, I'm going to win more than I lose. I'm going to make more on my returns than I am going to on my losses. And all of a sudden, my expected R multiple and my win rate lead to a profitable trade.
Yeah. So what happens when you get to 100K Bitcoin?
That's a good question. I'm on my way there, but when I get there, I haven't really thought of what I'm going to do. Probably retire, right? I've always enjoyed trading because it is a video game, but I don't have any far out plans into the future besides, start a family, have a house, et cetera, et cetera. But I'm not even there yet, dude. I'm so young that I'm cool with this going to $1 million a coin, but I'm also cool with it going to zero because I'm a part of it.
If it goes to $1 million a coin, you are going to be, you're going to not just be buying islands, you'll be buying countries.
Well, that's always been the goal. It's because I've always loved a great story. And I think my life, the way it's played out to be in the position I'm in, being financially free at this age when my friends are grinding away, it's empowering. And I want to be a part of this movement. I love crypto. I love everything about it, from a maximalist to the actual technology to the amount of money you can fucking make. It's just so much fun, and it fits my personality and who I want to be.
Gotta say, man, you're lucky to, have been born into this time and have the right timing for it. When I was in college, I showed up my freshman year at Penn and they asked me what my email address was and what I wanted to be. And I didn't know what an email address was. So I definitely have a lot of envy that I wasn't in a time where I could have been throwing my beer money into Bitcoin instead of, I don't even know. We weren't investing in anything, crappy stocks, at the time. So I think, it's really, really cool for people your age, the ones who have managed to sort of, break the code to have that opportunity, because this is sort of that once in a lifetime opportunity that most generations didn't have. You didn't find like many, rich 25-year-olds when I was.
Correct. I really think that cryptocurrency as a movement will be the largest transfer of generational wealth that, American or world history has ever seen.
But the question is, will it be the millennials that end up with that money, or will it just be the boomers in my generation that find a way to end up with it anyways by owning, whether it's the exchanges or the funds or whatever it is? That actually kind of worries me for millennials, is that they'll end up still being, even though they were the ones who adopted it, that they won't be the ones who capitalize on the wealth.
Yeah, I don't know. I really don't. I'd like to think we capitalize on it because, you ask the average, except for the Robinhood traders, what they would rather own, Bitcoin or gold, and the majority of millennials will tell you Bitcoin, right? So gold as a store of value is kind of diminishing in the millennials' minds. So I hope that translates into people actually going out. Should I have some investable income on the side? Should I buy gold? Should I buy stock? Should I buy Bitcoin? I'm hoping the vast majority actually go to Bitcoin, but we'll see.
Yeah, the thing is that people don't trade their gold away like degenerates with 100x leverage. Right?
That's very true. That's very true.
So I guess it has to, it's, whether it's Bitcoin or something else, you still, I think, have to be an investor first and understand that the way
you need to have that
to acquire that wealth is to put money away in whatever it is, Bitcoin being the superior option, and just not touch it, right? So
that's the toughest part for millennials. They want it now, especially see these people on Wall Street Bets and Robinhood making money and losing a shit ton. It's the inability to delay gratification that really hinders millennials' approach to whatever the world's going to come to in the next 20, 30 years.
Yeah, it's crazy time. I mean, it really is just a crazy time to be alive right now. So, what can we look for from you in the future? Obviously, you're releasing the trading course. Do you have plans, to expand on that once it's released, and what else you got coming?
Yeah, so I mean, obviously, stay tuned for the release of Tools of the Trade. It's been a real passion project the last 9 months. I really think that Trip and I have developed the most fullest encompassing curriculum that has ever been brought in the cryptocurrency space, maybe even outside of that. It remains to be seen. And it's a way that I really feel we're empowering people, and that's a good feeling I can go to sleep with every night. So in terms of what to expect, I mean, this curriculum is, in my opinion, one of the best. I had a friend of mine go through it over the last 3 months, never looked at a chart, and he's already taking profitable to break even trades after 12 weeks, which is
that's amazing.
That's incredible to cut that learning curve in half. Other than that, my real goal has been to really develop the crypto insiders community. I really think there's a place to make that community a whole decentralized, autonomous organization, whether that's some sort of community token, start outsourcing voting rights, and just make it a real example of what cryptocurrency can do to a decentralized community. So that's going to be my next step in the process after the release of the curriculum.
That's a pretty huge step.
Yeah.
So
I think it'd be a cool thing to tackle.
I have to say, it's really interesting to hear about your friend. I had a conversation recently. I don't know if you're familiar with Joe McCann,
yep.
Who's, obviously a well-known trader in the space. And we were talking about, the thing you and I were talking about earlier, which is can everybody just become a trader? And he was under the impression that you won't be successful until you've blown up at least 2 accounts. Right. So he is under the impression, and listen, he and I are both older guys who come from a sort of different generation of trading where you're going to go broke a couple times, but we didn't have this level of education or these outlets or these communities or anything. You were just out there on your own, just throwing money into the market, and you learned by losing. Do you think that people now, that there's enough out there and that you can really teach people to be successful and never have to go through the painful part of it?
I'd like to think so, just because. So actually, just yesterday, my buddy said, the one who took the course, said he took he's on a 10-loss losing streak, and I said, well, how much are you down? He said, I'm down 8%. That's amazing.
That's awesome. That's just good trading.
That's what I'm saying. You learn risk management in the first course, and I taught you don't risk more than a few percent, especially when you're still getting your edge in your system. To be down 10 trades back to back to back and only be down 8%, learning to size down. That's cutting the learning curve in half. He didn't blow his portfolio.
That's 15 years for some people of learning.
Yeah, exactly. So I think it is possible to really stray on the nurture side, to nurture people to become good traders if you teach them the principles from the get-go. And I think that's the toughest part for someone who might take the curriculum, already have a mindset of, I already liquidated myself 10 times on BitMEX. How do I know that this is going to help me win and be profitable? It's no guarantee, but if you learn the principles, you have that much more of a fighting chance to actually make it as a trader.
Awesome. So where can everyone follow you after this and keep up with you and make sure that they get their hands on tools of the trade?
So as always, at Captain Kole _1 on Twitter. That's kind of just my bread and butter where I post the most. And then obviously in the Crypto Insiders community on Telegram. Those are the two places I've always been and always will be. I enjoy communicating with people all the time. So either shoot me a DM on Twitter, always happy to respond, or on the Crypto Insiders Telegram. Again, I'm an open book for the most part. I really enjoy empowering people and teaching them to do what I did, because if I can do it, I really feel almost anyone can.
Awesome, man. I appreciate that. Thank you so much for taking the time. I'm going to convince you to send me the course so I can run through it and check it out myself. If you don't, I'll make trip to it. So don't worry about it. I'm getting it one way or another. But really, very enlightening, because you are a different generation and a different breed of trader, and you've accomplished so much more than most people my age at a young age. So it's really interesting to get that sort of different perspective, because it is a really, it is really like the tools that you've grown up with, the strategies that you've come up with are very different than anyone else, who didn't have those, I guess, tools before. So really interesting. And thank you once again. And I can't wait to get this out there and see what people think.
Thanks, God. Appreciate you having me on. It's been a blast.
Right, have a good one.
Let's go.